And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Day on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Welcome to my podcast. Lots to talk about today. First of all, we are now in a stagflation zone. We haven't seen that in 30 years. Remember, it was 1972 to 82, and it took us 10 years to get out, because stagflation is very nasty, because you have two problems that cause stagflation, and you fix one, the other one breaks. You fix that one, the other one breaks. So we're going to talk about that today. Also, what they're keeping under wraps is their AI bubble. Are you kidding me? The AI bubble is going to make the dot-com bubble look like a nothing. $5 trillion was wiped out in the dot-com bubble. They've already take the AI bubble, which is already, we're seeing big cracks in the AI bubble, and we're going to see some real major losses. So we'll go over those as well, okay? So we're going to look at the AI bubble, but first let's start out with what's very dangerous is the stagflation zone we are in. 30 years ago, we hit the stagflation zone. And what is that? Well, that's when you have oil. It's above $112. We're now at $115. And that's when you have 10-year treasuries at 4.25 to 4.50. We're above 4.25. So let's take a look at that. So the stagflation problem, okay, is that we are smack in the middle of the danger zone because, again, oil is well above 112. It's 115. And at 4.25, we're at 4.35 already. So we're there. We're there. And the big problem we're seeing right now is that 10-year treasury yield hanging at 4.35. There's no relief in sight for stocks. Stocks just keep drifting. And oil, at $115, that's a whole big problem. Now, again, as I said, the stagflation is nasty because, one, you have inflation, and two, there's no growth. You couldn't be in a worse situation. So the problem is, as the Fed fixes inflation, growth breaks, and they go back to fixed growth, inflation breaks. 10 years, 1972 to 82 to get out of that. We don't know what's, now again, we haven't hit it yet. It's not official. But we're there. Now we're prepared for stagflation. I've been working with my members for some time now, going over, okay, if stagflation does hit, we're prepared. We know what stocks to sell short. We know what stocks to go long. So we're prepared. But most people aren't prepared. They won't know what stock to buy, what stock to sell short. Now, let's talk about the AI bubble for a moment. Year to date, $500 billion have been wiped out. $500 billion. So you got the biggest names, including chips. Now they spent trillions and trillions of dollars on infrastructure, but they're only receiving back billions in revenue. So we are in the middle of a collapse, but they're not going to tell you that. Now let's take the biggest names. They wiped out 400 to 500 billion like nothing, just bam, gone. Now the biggest cracks are in the chips, NVIDIA, AMD, all the well-known CRM, Adobe, Teams, Snow, you know them all. Now Adobe is down 65%. We have some beautiful shorts. It's a shame how Wall Street scares people and tell them not to short. They're going to go blind. They're going to be, lose their firstborn. All this crap. But we made some serious good money shorting all of these. So Adobe's down 65%. 150 billion was wiped out. That's what I'm telling you. What's going on right now that nobody's talking about, it makes the dot-com look like nothing. Salesforce, down 51%. They lost 120 billion. Nobody's talking about that either. Team is down 85%. A 40 billion wipeout. No mention of that either. Snow dropped 70%. That was a beautiful short, Snow. 70%. 60 billion lost, gone. Now, down about 40%, lost 50 billion. You can go on all day long with this stuff. So that's the big problem that we have right now, is that you have stagflation on one hand. You've got the biggest cracks in these tech stocks, the AI bubble. And the real problem we got right now is yields keep going up for the wrong reason. Now, the other thing that's going on is that the key reversals, every time that we have a down day, everyone jumps in, not everyone, smart money doesn't do that. You have a big down day. People jump in, buy on a dip, buy on a dip, buy on a dip. They have no idea what they're doing because people don't understand how the market works. When market collapses, the stock is being shorted. So let's say there's only 10 people in the world that trade stocks, and all 10 decided to short their stocks. They were wrong. So they had, say, $10,000. So they shorted, they were wrong. Now they're trapped, they're losing money. Now they got to buy their stocks back. So now they finally buy their stocks back, they got them all back now. They're out of money. See, that's what people don't understand. That again, when you see these markets go down hard, everybody jumps in to buy on the dip, and they always lose. Remember, headlines is what's making these markets move. And every time Trump comes out with a headline, if you remember, we had one on March 28th, big headline, the market went up big time after it dropped. Then we had another one on the 30th. We had a big drop that Monday, and he came out with another big headline about how the people they're dealing with in Iran are sensible people now, they're not crazies, and the market went up. Both times, I said, do not chase these stocks. If you're in these stocks and they're going up, sell into the damn things. But don't buy on dips, you're going to get crushed, you're going to give it all back, and they did. So, and what people don't understand, traders, because Wall Street doesn't want you to know this, that when you look at when you have a short covering rally, you have a big down day, and then next day turns around and goes up. Now, the problem is on that big down day, like we had on Monday, if you remember going back on I think it was 3:30 on Monday, we had that big down day, Monday. Tuesday, it goes up again, starts going right back up, everybody jumps in. They don't understand that it's a short covering rally, and in a short covering rally, they don't last, because just like I explained, there's 10 people on this earth that are trading stocks, that's it. They short with the money. They cover the short with the same money. Once they're short, they bought everything back. There's no more money to trade with. You've got to have the institutions come in. So during these short covering rallies, you shouldn't be buying on a dip. You should be looking at a test to see if the big boys, the 12 big institutions, are they going to come in? If they don't come in, the stock stops going up. They don't work. You got to have new money. So what you need to know is, like, again, if you go back to that Monday, we had that big down day. Tuesday was the intraday. And then, remember, on Tuesday, it's got to break that Monday's low. You got to break that Monday's low. And it must show on Monday's low. They had big volume coming in at that low. So if you have money coming in at that low, and you haven't seen that before, that's telling you, wait a minute, the big institutions are rotating out of their safety zones. And they're coming out of the bond market, investment grade bonds, and they're coming out of the treasuries for safety, and they're going to now go to risk buy stocks. But on that Tuesday, the important day, two things didn't happen. First of all, when we went down on Tuesday to test that Monday's low and broke it, guess what happened? That didn't happen. It tried, but didn't break the low, and there's no new volume coming in. So that tells you as traders, if you're in there buying on a dip, you're screwed. So always remember that. Very important. So you get a big down day on Monday, or any day, but let's just use Monday because this happened. Get a big down day on Monday, rallies back up on Tuesday. Now, if you think I'm going to buy all these stocks to make a fortune buying on a dip, you're crazy. The only way that will happen is on Tuesday, when you're trading during the day, it goes down and takes out Monday's low. And also, when it takes out that Monday low, you want to see more than average volume coming in on that low. If those two things don't occur, then you're really screwed up. You're not going to make money. You're not going to make money. So stop chasing these stocks. Because if you keep chasing them, you're going to keep losing money. And that's what people are doing right now every day. You can't make money on these rallies because the institutions aren't going to buy. And that's the big problem we're having right now. So that's what's going on. And once we get the institution money rotating, we're in real deep trouble. So I'm going to show you something. If you take a look at what's going on, if we hit this again, if we have this big sell-off, then you got to understand which stocks you should be in and which stocks you shouldn't be in. So, first of all, in our 11 sectors, if we have stagflation, you got to be very, very careful with cyclical stocks. Cyclical stocks will kill you because cyclical stocks are the backbone of our stock market. And you got 6 different groups in those cyclicals, 6 different groups we trade. So, and you got to make sure that the consumer discretionary, they get hit the hardest, like Amazon and Tesla and Lowe. So remember, we're in this terrible area right now where we have this test. I don't know what's going on. We have this test going on, and if that test, okay, continues to fail, then you're in deep trouble. So please, if they finally admit that we're in stagflation, make sure you're in the right stocks. Make sure that your discretionary stocks, that you're not buying those stocks. You're going to get killed, and don't buy in the dip. Another one, transportation. If you buy transportation stocks when we're inside this terrible, again, stagflation, which we are in right now, really, but nobody will admit it. That's the big problem. I mean, they just, they keep telling us how everything's fine, but it's not. Now, then the other thing, industrials, that's another group you don't want to be in. And you don't want to be in materials, and you certainly don't want to be in the banks, the big banks or the small banks. So once they admit we have a stagflation problem, those are the stocks that you short. And that's why it's important to really understand what's going on, understand how to sell short as quick as you can, because we are going to have stagflation. There's no question about it. And here's what's going to be the real trouble. Not only are we going to have stagflation, we also are going to have, again, the problems with this AI bubble. Nobody's talking about it, but it's burst, it's cracked, it's over. I mean, they lost a tremendous amount of money. They're not getting any revenues back. They keep spending and spending and spending, and people buying stocks left and right. Oh, AI. But there is, again, is in real trouble. Now, oil is above $115. That's terrible. So oil is the inflation engine, and oil is the risk premium. And until oil comes down and the Strait of Hormuz stabilizes, this market will continue to be squeezed. And that means the 10-year yield is going to stay above 4.35%. There's no relief for stocks. Stocks are drifting. Traders are stuck between rising oil, high yields, stagflation. So you really got to know what you're doing. And we'll help you. But by God, you got to understand how to sell short to survive this market, or you won't. philsgang.com. Thank you for listening.
Are you nuts?